Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today we are back at the Rule Symposium again, and today I'm with Rich Checkan of Asset Strategies. How you doing today?
I'm doing great. How are you?
Man, just a long night.
Yes, it was, for a few reasons.
Yes. So it's fun. I always encourage people to come out and just, have fun, connect with people. Some of the folks you're seeing in person or seeing on video, see them in person, and so there's a lot of we have a lot of fans here this year, I think.
Yeah, we do. I'll tell you, I was mentioning before we got started, I'm losing my voice. So we've only been here about a day and a half, 2 days.
Yeah.
And I don't think I've stopped talking since we started Monday afternoon.
Oh, yeah.
I'm already cracking and squeaking and everything else. I don't know what it's going to be like on Friday.
You get you some hot tea and some honey after
That's
this.
That's it.
So yeah. So Asset Strategies, heavy focus in precious metals. What else is there?
Yeah, so we're a full service tangible asset dealers, the way we put ourselves out there. But that's a lot of big words for we buy and sell gold, silver, platinum, and palladium, coins and bars. We buy and sell rare coins, mainly early U.S. gold and silver, but we also deal with world and ancient. We work with certificate program. It's the Perth Mint certificate program. It's been around about 30 years. We designed that for the Perth Mint in Western Australia back in 96, 97 when I first got to the company. And we work with personal and IRA funds. So the big thing is anything available in the marketplace we can sell you. Anything that you want to sell back to us, we'll buy even if we didn't buy it from you. So we're a full service dealer.
That's cool. So just for the audience that may not understand what a certificate program in the Perth Mint is, what is that? What's that entail?
So it's people look at it and blush and they say, it's paper gold. I don't want anything to do with it. The reality is it's just storage of your precious metals with a third-party custodian, and you get basically a certificate or a warehouse receipt saying this is what metal is held on your behalf at the Perth Mint. So the thing about this program is it's unique to this day. 30 years ago, it was the only government-guaranteed precious metal storage program in the world. And to this day, it still is. So it is one and only. The way we developed the program, basically the things we tried to solve for the Perth Mint in terms of being able to compete against the U.S. Eagle and then to get out from under high leasing costs from bullion banks, we structured the program that helps the Perth Mint save a lot of money in terms of their previous business model. And it brings some really neat features to clients like 2.25% pricing for gold, silver, and platinum over spot, no fabrication fees, no ongoing storage, 100% back metal, full insurance, no leverage, no derivatives, and no leasing. It really is a unique program in many ways.
What would be the reason why someone may do a certificate program where their metals are in the vault? Obviously, you got geographical diversification. Yeah. I've heard the stories about confiscation, and the United States, you want to hedge against confiscation. And we had a conversation about that last night.
Yeah, I'm not a big fan of that argument.
So
I don't just ever see it happening again. But I get it. There's people out there that believe it might happen for whatever reason. But no, I think Perth certificates, what we designed there, is probably the cheapest, safest way to own precious metal because of the government guarantee and the low costs upfront and ongoing. And yet, it's still not my first choice. I believe you hold precious metals first and foremost as a store of purchasing power with high liquidity for a potential financial crisis you hope to never have, right? But if you have it, you got to put your hands on that metal quickly. So for me, the first step for any investor is to buy gold, maybe a little bit of silver for divisibility, and take delivery of it, right? But it's the cheapest way to own or to hold metal until it's lost or stolen. Then it's the most expensive, right? Because it's 100% loss. So I think you should hold enough to where you can bridge the gap to reach other assets in a time of crisis, and you don't want to hold any more than you feel comfortable safeguarding and storing yourself. And then at that point, I think you should be looking at third-party custodians. Number one on the list, in my opinion, should be Perth, whether it be for personal or for IRA funds. And the IRAs are important. We've been putting Perth Mint certificates in IRA since 2001. With an IRA, you have no choice. You cannot hold the metal yourself. IRS has ruled on that clearly. If you do, it's a distribution. You're going to invalidate your IRA. So that must be in the hands of a third-party custodian, and there's nothing cheaper available to you or safer than Perth Mint certificates.
Yeah, I've always been curious about the IRAs. I mean, because typically, like when you start like a brokerage, a Roth IRA or whatnot, traditional IRA, it's the brokerages handling, the stocks, and you can buy into stocks or you can do mutual funds, whatever.
Yeah.
How does that look with like gold? Are you opening another account? Is there contribution limits? Like what does that look like?
So typically, your normal brokerages, Schwab, whatever, not gonna be able to hold metals other than an ETF, which we could talk about that, but you're not holding any metal, right? You're holding shares in an offshore trust whose job it is to mimic the gold price, but you're not holding any gold.
You got to have hella shares to redeem that, too.
Exactly, exactly. And by the way, most people don't do it, but you should read the prospectus. Because the shareholders offshore are very well protected, but you, the investor, are typically not, right? So the bottom line is that's really the only option they have for you in an IRA at a brokerage is, ETFs. So there are other trustee administrators, not probably household names, folks like Inspira Financial, Equity Institutional, Gold Star Trust, Kingdom Trust, that know how to deal with precious metals, either physically, domestically stored in the U.S. or offshore through Perth Mint certificates. They know how to administer those IRAs. So you'll probably have to set up a new trustee administrator relationship, and then you could either transfer funds over in a trustee to trustee transfer, whatever you want to allocate to metals, or you can contribute to them directly, with a contribution for a given year in order to fund the account and then make the purchase of precious metals. Okay, we can walk you through that. It sounds complicated. It's not that hard.
Yeah, and I mean the simplicity of it is like the same rules apply for a contribution limit. So if you're doing like
nothing different,
$7,000 a year, then you put a $7,000 in there, then that $7,000 can purchase precious metals hold. Got it.
Yeah, okay. So we help you open the account, fund the account, and then whenever you're ready, we help you buy the metals to fill the account.
Got it. So. Okay, so getting into the metal, I mean, obviously gold, near all-time highs of measured in dollars. What do you think is the trajectory from gold from here, and why?
Up. And I think it's safe to say, and I don't say that tongue in cheek. I don't say it cavalier. For me, honestly, we talked last night. I think it's the biggest no-brainer in the history of no-brainers. Show me anybody in Congress other than two people we talked about that voted against the big beautiful bill, and I'm not saying that that's a bad thing. What I'm saying is both sides of the aisle for decades have overspent, right? They're spending more money than they take in revenue. They're very poor stewards of our U.S. dollar and therefore our economy, and they put the Fed in a position. I'm not making excuses for the Fed. I don't even think we should have one. That could be a whole nother segment. But the Fed can't fix that with interest rate manipulation. The way to fix that is Congress has to stay within the budget, because when they don't, we increase the money supply, which is by definition inflation, and that causes price inflation of everything of value. It could be a cup of coffee, it could be a college education, a home, an ounce of gold, an ounce of silver. As long as we don't balance budgets, gold's going higher, period. There's no question.
I've asked Rick the question before, just like, when would you sell your gold? Like if there's like a super high appreciation, from 2002 to 2011, where it's going to be a blow off top, would you sell in that situation and rebuy back lower or what? And his answer was never.
I'm guessing Rick is never.
Pretty much just like whenever we balance the budget and reduce the deficits.
Well, I have a slightly different answer, and I'm not trying to contradict Rick. He's probably smarter than I'll ever be. But it depends on me on what the purpose is of the metal. Right. So if it's your wealth insurance, right? So that store purchasing power with high liquidity for potential financial crisis you hope you never have, that you buy and you hold and you never ever sell unless you have a financial crisis. So I'm with Rick there. You maintain that level, whatever that allocation is, and you don't touch it unless you have an emergency. If you do, you sell it immediately, and then you meet the crisis, and then as quickly as you can thereafter, you rebuild that so you're ready for the next crisis you hope you never have. If you're fortunate and you never have a financial crisis, you give it to your heirs or charity, what have you, give them a start in life. But in this environment, where we're at all-time highs, and yet for like the third or fourth straight year at all-time highs, I still believe gold is dirt cheap at all-time highs and has the ability to appreciate considerably. Same thing with silver, and even more so. I think there's room for an additional allocation of for-profit precious metals. So gold and silver, I think, weighted towards silver there. I like, personally, another 10 to 15% of investable assets. For net worth, I love 10%, or for wealth insurance, I love 10% of net worth. For in profit, I like 10 to 15% of investable assets, and I manage that differently. If I put 10% in gold and silver for profit and it drops in half, I buy 5% more. If it goes up and doubles, I sell half of it. I manage that differently. I do buy and sell that. And if I do that, I'm buying well every time it dips. I'm taking profits every time it shoots up a bit. And if that's the case, I never, ever care about where the top is. Because I'm buying well and taking profits all along the way until it makes a dip. And that dip's not a dip. It's the start of the bear market. And I've got a few things I look at to determine when that is. I need 3 or 4 of them to fire at a time. I'm looking at duration, the dollar strength, interest rates, gold-silver ratio, sentiment, let me see, political, social stability, things of this nature. And when I start seeing 3, 4 of those things start coming together, I say, okay, the rain clouds are converging. It's about to rain. Time to look for the exits for my for-profit metal.
You should shoot me a text when you see those 3 things come together.
I will. What I'll do is I'll send you the criteria and what I'm looking for, the duration, the price of the gold, et cetera. But right now, none of them, not a single one, are firing because the Western investor's not in this. They're selling into this market, not buying. They'll eventually buy, but we're not there yet. We got a long way to go.
Yeah, for sure. And there's been like a lot of, obviously, we had the blow off top in 2011 or 12, and we were coming out of a global financial crisis, which was kind of like, okay, why would you sell? Like if the banking system already showed to be faulty, and they just printed a whole lot more money, and they started QE and everything. And so I'm kind of wondering, do you think the sentiment now, it's like, it seems like maybe once the storm clouds left in that era, like people were more inclined to sell. Do you see that now, or do you think this is going to stay persistent? Because right now a lot of people they're looking at the geopolitical. We just had COVID, just got out of COVID. We had election conflicts and things like that. We've had
collusion and everything else.
Yeah, we had so many things, right? And it's like, okay, is this something that's going to continue? To where someone may not even think about selling, like just the average person. And so it's kind of, obviously it's hard to predict the future, but it seems like we're at a constant conflict, constant crisis, constant uncertainty, and I don't remember ever feeling this way.
Well, I got to tell you, I think investors out there, and rightfully so, are incredibly confused right now. They're getting all sorts of stimulus from all sorts of different directions, and not all of it makes sense. I think you mentioned the financial crisis, 2008, 2009. You mentioned the COVID. You look at the graph of the money supply across time and over those periods. That's when the damage was done in terms of the expansion of the money supply that led to gold prices and silver prices that we haven't even attained yet, in my opinion, right? So again, the trajectory is clear. If you ever want to know where the gold price is going, look at the money supply.
Yeah.
If it's going up, gold price is going up. There's no way around it. But I do think, right, wrong, or indifferent, I think when President Trump was elected, there's a big chunk of folks that said, hey, I'm going to wait and see if any of these policies come to play, if it's going to help the economy, if we're going to balance the budget, we're going to do this, we're going to do that. And I said at the beginning of the year that I thought it was going to take a couple quarters for people to wait, see, and kind of figure out if things are changing or if they're not. For me, not political commentary, I'm saying things have not changed. I just saw the passage of a big, beautiful bill, and it does not reduce spending. It does not reduce the debt. Yeah. It's going in the same direction, which is going to lead to more monetary expansion. So I think when people see that, get it, it ruminates, I think you'll start seeing people moving in metals again. That may take this fall, I don't know, but I think it's coming because now it's being clear that it's not going to be that easy. Yeah. To balance a budget. And if you do, you're probably not getting elected again because then you can't deliver on all the promises.
Yeah, for sure. And so, right now there's a lot of tailwinds for gold.
Yeah.
Multiple different reasons. And, obviously geopolitical conflict, national debt deficits. And then right now it's staying elevated while the Fed has rates, at 4.5%. And typically people used to say, okay, well, gold tends to go down when rates go up, and then now we got gold going up while rates are still elevated. And so what are you seeing there?
Yeah, that's one of my indicators is interest rates that I'm looking for. I think what it takes in terms of interest rates to make gold go down to trigger that turn to the bear market is higher interest rates, and I think high single digit, low double digit interest rates, okay? In 70 to 80, it took, almost 20% interest rates from Volcker to bring gold down and bring it to its knees. We got to 5.5, 6, whatever the hell it was, and then they started dropping. I mean, we're nowhere near the level that would discourage people from owning gold. If you look at the real return, you take the interest rate minus, the inflation, and that could be the stated inflation, and it could be the real inflation. However you want to look at that, exactly, shadowstats.com. So the bottom line is it's either very low return or negative growth in terms of real return, and that is not enough to make people stop buying gold. Yeah. All right, so we're not even anywhere near, and they're looking downward, not upward. So I don't think that's going to change anything anytime soon.
Yeah, so gold to silver ratio. I mean, it got really high recently.
It got as high as 127 at one point.
Was that historic?
It was historic. I don't think it's ever been that high.
Wow.
And then it sat at 90 to 100 for a long time.
And then where's it at around now?
This morning when I did a weekly update, it was at 90 and change, 90.04 or something like that. So lowest it's been in a while, but still, we used to look at 80 on the gold silver ratio, the number of ounces of silver it takes to buy an ounce of gold. We looked at 80 as that magic number, right? When it got above 80, that told everybody that gold and silver were dirt cheap and ready to rise, okay? And then as investors buy gold and silver, silver's a smaller cap market, so the same dollars are going to have a bigger impact. Silver goes up faster, tail end of the bull market, and that number comes down 35 to 50. We're still 10 points above the normal high. So, and the reason for that for me is very simple, and it confirms that investors are not in this market. The reason it's so high is because investors are not in the market. Central banks are. And what don't central banks buy? Silver and mining stocks. They buy tier 1 gold, right, for their reserves, and they're replacing dollars with it. That's where the activity is right now, and a bit of retail Asian trade as well. The Western investor's not in this. When they are, you'll see the GSR come down substantially below 80. There's no question about it. That'll be an indicator that things will move in the right direction.
Yeah, for sure. So with asset strategies, I mean, obviously you all sell precious metals, and I've been talking to some friends and family just about getting in, and people get in and they see like gold at $3,300 an ounce plus the premiums and whatnot.
Yeah.
And they kind of get scared, right? And
Yeah.
then I talk to them about fractional, whether that be 1 grams, whatever the case may be, just like you may just start somewhere.
Yeah.
So what's kind of your advice for folks that are just getting into this market? And I mean, some people may have the amount of income or wealth to buy like a more amount, and some people may just kind of be like, okay, I just need to get a little bit of time just to start building the base.
I think a little bit of time. I'm starting my kids out. My adult kids, 18 to 25, right? And they knew Dad was a gold dealer his whole life, and they know kind of what I do and whatnot. But it doesn't get real until you put it in their hands, right? And I think we talked about this a little last night. I started accounts for them, and now my oldest daughter, Gracie, she's like, you see what gold's doing? Now it's real. It's her money. It's her gold, right? Put an ounce of silver in their hand. When I started working for ASI 30 years ago, gold was $250 an ounce. I couldn't afford it. All right, it was expensive at $250 an ounce to me. So my first purchase was silver at $4.53. And then I started buying a little bit more silver. Then I parlayed that. I sold that, and I bought some gold. Just start is all I could say. That's the only advice. And there's a lot of products out there where you don't have to buy $3,300 an ounce gold. One instance is what I did. Like I said, start with silver. Work up to it. Start getting into it, and over time, buy a little. My old boss used to say, every paycheck, pay yourself first, right? So take a little off the top, put it into precious metals, start protecting your future. Another thing is, I mentioned the Perth program. There's kind of a 2.0 version of that where it's online. The minimum is $50 US, right? The cost is 1%. No storage fees, no fabrication fees. You can buy $50 worth of gold at a time. You can set it up on an accumulation program. Gold is 5,000 years old, but the technology is catching up with the marketplace and making it more accessible to people. So reach out to us. We'll have solutions for you. You don't have to be kept out of this market.
Yeah, for sure. I mean, even thinking about even if someone wanted to start with silver, once that gold to silver ratio comes down, then you could sell that silver to buy gold.
And that's the play. When silver commands more ounces, you go ahead and sell it, buy the gold, goes back up again, sell your gold, get more ounces of silver. So no question about it.
Yeah. So what are some other things that investors should be thinking about right now? What are some other things?
Yeah. So if a lot of people are looking for liquidity and where they're going to get the funds to make a difference, consider your IRA. Right, so a lot of people have their funds tied up day to day. I mean, I think I told you last night. We're seeing a lot of selling from the middle class. Successful people living paycheck to paycheck, covering the overages on the credit cards, and they're selling their precious metals to cover credit card debt. That's the most used reason, if you will, or most common reason that we get for why people are selling gold and silver right now. It's expensive to live right now. There are a whole bunch of factors coming in. They say inflation's coming down, right? It's only 2 to 3% now. Okay, if you believe the number, whatever, I don't care. But that's 2 to 3% over the 3% from last year, which is over the 10% from the year before that. That's pretty hefty inflation that has built up over the past 4 or 5 years. Jerome Powell will tell you that people are buying more. It's because the household finances are strong. Garbage. They're buying more because everything costs more. They're buying the same amount of things, but the prices are higher, right? That's what's going on, and they're bridging that gap with debt, and that's when they get into trouble. So look elsewhere. Look to the funds for the future. Metals are an incredible long-term hold. Why not put it in that plan for your future and start, finding some room in the IRA for your metals might be a good place to start if you need liquidity.
Yeah, so say if someone, like for me, I have an IRA and fully contributed this year. And, just say like I'm looking at next year, am I able to split that with half stocks with my other IRAs and then half into?
Absolutely. So where the constraint is how much you can contribute each year.
Yep.
right? If that's 7 or whatever the number is, that's the total amount you can contribute, but it doesn't mean it has to all go to the same place. You could put a little bit here, a little bit there, put some in the metals, put some in the stocks. That's entirely up to you. They are self-directed IRAs. You make the call. Yep, absolutely, you can do that.
And then what does that look like? Like say you're about to retire or whatnot. What happens there?
So then what you start doing is you start looking at your required minimum distributions, right? So I think it's now bumped up to 72.5 from 71.5, and you have to start taking money out, right? So you look at all of your retirement vehicles, right? Your IRAs, et cetera. You may have 3 or 4 of them, and you look at the total aggregate, come up with the value, and that's where you come up with the RMD. The RMD is a percentage of all of it, but you choose what you take out. So at that point in time, you may want to remove precious metals. You may not want to. If you don't want to, you could take all of it out of stocks. It's entirely up to you. But everything contributes to the number, and then where you take that number is your call from a planning standpoint.
And are people like redeeming like physical metal, or are they redeeming like the price appreciation of the metal, like in dollars?
In their IRAs?
Yeah.
Yeah, so you can do both. Some of our clients will go ahead and sell whatever they need to in order to meet their RMD. Others will say, you know what, I've got to take a distribution. I really don't want to sell my gold, right? So instead, let's say they have to take out, I don't know, $6,000 for their RMD. They'll, instead of selling gold or silver, they'll have them ship 2 ounces of gold to them. Okay, it's a little over $6,000. They meet the requirement for the minimum distribution, and they keep holding their gold for the future. So you have that option with precious metals as well.
Yeah, thank you for breaking it down. I mean, I've seen the IRAs and everything, and I've never really looked into them. I'm just like, this stuff doesn't even, how does this even make sense or whatever? And so I appreciate you breaking that down, and definitely intriguing because, I mean, because like if I were to, you know, no shade to like Sprott, but if I were to like own Fizz, you know, that in my Roth, you know, it takes so many shares to redeem that gold. Like you have to be like almost like a hedge fund to redeem the gold. In this case, you know, you're able to put money into the Roth or the IRA, and then whenever it comes to distribute, you can actually redeem the physical gold.
Here's my favorite play right now with IRAs in particular. I'm sure your folks are aware that silver just broke out of like a 45-year cup and handle, incredibly bullish formation. We've broken out. It's currently at about $37 or whatever, just under. People believe that the upside potential of this rally is about $90 to $100 silver, okay, over the next 2 to 5 years, whatever that might play out to be. How about you take Perth Mint certificates in a Roth IRA, if you have a Roth, if not, if you have the ability to convert to a Roth. Buy Perth Mint certificates, so you're paying 2.25% above spot for silver, no fabrication fee, no ongoing cost in terms of storage through that program. You'll get the price appreciation, which I assume should be significant, and then you don't have to pay taxes on the gains. That's probably the best strategy I have for folks right now if you want to maximize the potential of this market.
Yeah, for sure. Yeah, definitely. And then people can also own platinum and palladium in there as well if they want.
Yeah. So since in the first IRAs were allowed in '86, they were only gold and silver, Eagles. That's it. That's all you could put in it for precious metals IRAs. In 1997, they passed the Taxpayer Relief Act, which broadened that severely. It allowed you to hold gold, silver, platinum, and palladium as long as it met minimum fineness requirements set by the LBMA, the London Bullion Market Association. Doesn't matter where it came from, doesn't matter what form it's in, coins, bars, meet that minimum fineness and being gold, silver, and platinum, and you could own it in an IRA. So yeah, you have a lot more flexibility now. At Perth Mint, your only options are gold, silver, and platinum because the Australian government doesn't recognize palladium as a precious metal, so it's subject to a GST, so kind of like a VAT tax, and it makes it kind of untenable. Yeah. But gold, silver, and platinum are available there. Outside of that, with physical metals, all 4 metals are available. Just can't do rare coins.
Yeah.
They're not allowed in an IRA.
Okay, got it.
Yeah.
I was just thinking about the irony. You mentioned the Taxpayer Relief Act, and I was like, is this a relief from taxes or relief from like government telling you what you could put in your IRA?
I don't know that it was a relief from much, to be honest with you. But they love their names, don't they?
Yeah, for sure. Well, shoot, you have a newsletter, website, and everything. Plug the audience with where they can connect with you and read some of your research and all of that.
Yeah, sure. Appreciate that. So it's our website is ASSET, ASSET, strategies, strategies.com. If they want to ask information, just reach out, ask questions, whatever. It's info, ASI, at assetstrategies.com. By all means, you can reach out to me directly, Checkan, Checkan, at assetstrategies.com. And we've got a toll-free number. And you'll see why in a second why I left this for the end. But it's 800-831-0007, which is 10 better than James Bond.
Okay,
So.
got it. Yep, that's good. Well, you all, I'll be sure to link to that in the description below. Be sure to go check it out. Appreciate what you do and just educating the people.
Yeah, I'm happy I got to meet you here, and I look forward to getting to know you better over time.
Yes, indeed.
Thank you, my friend.
Yes.
You happy with that?
Yeah, that was
Awesome.
good. That was good. I'm glad because